Bitcoin is having one of its worst months in years, down roughly 24% in February, and suddenly the question everyone is asking is this just a healthy pullback or the start of something much bigger? Because behind this drop, there's more than just price action. There are macro forces, institutional flows, and risk signals that investors need to understand. Let's break it down. Bitcoin is currently on track for its worst monthly performance since June 2022, according to recent market data. Here's what we're seeing. Bitcoin fell roughly 24% in February. Price briefly slid toward the low $60,000 range. Crypto markets broadly weakened alongside risk assets. Now, a drop like this in crypto is not unheard of, but what makes this moment different is what's happening in the broader financial system at the same time. Because this isn't just about crypto, this is about liquidity, risk appetite, and global uncertainty. This doesn't necessarily mean institutions are exiting permanently, but it does signal short-term cooling. Driver number one, risk-off sentiment in global markets. Recently, markets have become more cautious. We're seeing rising geopolitical tension, trade uncertainty, volatility in equities, stronger US dollar pressure. When investors get nervous, they typically rotate into safer assets like cash, treasuries, and defensive stocks. And historically, Bitcoin often trades like a high-risk asset during these periods. So when risk appetite drops, crypto usually feels it first. Driver number two, ETF flow dynamics. Another key factor is spot Bitcoin ETF flows. Driver number three, profit taking after a huge run. Let's not forget the bigger picture. Before this pullback, Bitcoin had a massive multi-month rally. Whenever an asset runs that hard, two things typically follow. Early investors take profits and leverage gets flushed out. In crypto markets especially, corrections of 20 to 30% during bull cycles are historically common. So part of what we're seeing may simply be market mechanics doing their job, because those could determine whether this is a normal correction or the start of a deeper consolidation phase. The concern isn't just the drop itself, it's the timing. This Bitcoin weakness is happening while global tariffs are rising, AI-driven tech volatility is increasing, the Federal Reserve remains cautious, and liquidity conditions are tightening. When multiple risk factors stack together, markets become more fragile. And crypto, being one of the most sentiment-driven assets, tends to amplify those moves. Not full panic, but definitely elevated caution. And the honest reality is, it's still too early to declare the bull run over. Historically, Bitcoin bull markets have included multiple sharp pullbacks along the way. In previous cycles, drawdowns of 20%, 30%, even 40% have occurred before new highs were eventually made. Key things long-term investors are watching now. Are ETF inflows stabilizing? Is macro liquidity improving or tightening? Does Bitcoin hold key technical support levels? What does the Federal Reserve signal next? Make sure to like, subscribe, and I'll see you in the next one. Nothing here is financial advice, investment advice, or a recommendation to buy or sell any asset. Always do your own research and consider speaking with a licensed financial professional before making investment decisions. So here's the bottom line. Bitcoin is facing its worst month since 2022. But whether this is a healthy reset or the start of a deeper pullback will likely depend on macro conditions, institutional flows, and overall market risk appetite in the weeks ahead. What do you think? Is this a buying opportunity or a warning sign for crypto? Drop your thoughts in the comments. And if you want clear, no hype breakdowns of the biggest moves in finance and crypto,